Today we found someone who lost their inheritance on Intel stock. Wall Street Bets is making fun of this person, but I thought it's a good idea for us to watch his story, learn from it, and I'm going to use my 4 years of experience in trading and investing to teach you how to avoid such mistakes. Let's see what happened. The first post is that this guy bought $700,000 worth of Intel stock, and his average cost was $30.5, as we can see. He has no diversity. The guy literally said YOLO. He's risking it all. He says that grandma died 2 months ago and left me $800K in inheritance. I'm only a junior in college, and as a math major, I don't really have any use for the money. I don't have any dates. He's very lucky that his parents are paying for his education, but he has always heard about people losing their inheritance, spending it on garbage instead of investing. He told himself that, hey, let me not be one of those stupid guys. Let me invest all of it. And his parents were proud of him. But he put $100K into a high-yield savings account, which I think is a very good idea. And he bought $700,000 worth of Intel stock at market open. And he plans on holding this for a decade. And I want you to remember his words, holding this for a decade. And here is why he likes Intel stock. It's up 9% year over year. He's been heavily investing and restructuring by building out foundry business, It has other chips in production. I think the fact that Intel is positioning itself to be the largest semiconductor manufacturer in the U.S. is massive. The U.S. government is prioritizing domestic semiconductor production. I think he's been reading a lot of the news, which is a good idea. He did his due diligence. If NVIDIA and AMD are ever forced to change manufacturers due to rising tensions between China and Taiwan, Intel will likely be the sole manufacturer for NVIDIA and AMD. I think that's a very valid claim. Intel has been heavily investing in R&D, but he has all of these things. He's saying the PE is great, he likes the stock, and he thinks it's really cheap right now. And 23,000 people voted up. They like his choice. This is the first thing that we have to learn about the stock market. So the price of the stock market, it's always overvalued or undervalued around the underlying business, but it's rarely the real price. After he bought it 3 days ago, what happened the next day? He comes up with another post and he says, I definitely picked the wrong day to buy Intel. He's updating us on his 700,000 yellow update. So here we can see that he's down 30%, and this happened in just 1 day. This is because Intel reported some bad earnings, and he now has 500,000 of his 700,000. He lost 300,000. And his plan was to hold for a decade, as he already told us. And he said that it hasn't changed. He said that it's going to be rough, and the past 2 days have been the scariest days of his life. And I feel really sorry for him, because losing 200 in just 1 day is probably the worst thing that could ever happen to someone who is really that young. I feel like he feels really guilty, and he feels like the whole world is against him right now. His parents don't know that he has lost a third of the inheritance. Every time I talk to them, they can see how stressed I look, and they keep asking me what's wrong, and I don't know what to say. How can I possibly explain this to them? My only option is to hold for a decade. That's what I'm going to do. I know a lot of people are going to shit on me, and you should, and I recognize that I made an unnecessarily regretted decision. I've received a lot of DMs and Reddit notifications offering me mental help and suicide hotline numbers. I appreciate your concern, but I'm fine. I'm holding long term. I'm sorry if my decision made you upset and reflect on your financial situation. That was not my intention. I appreciate all your support and constructive criticism. Some of you have been really mean, but it's okay. I know I deserve it, but I'm holding forever. Intel will succeed. I think it's kind of funny that he lost the money. When I look at the memes that they brought up, you can see some memes here. Your Nana in heaven watching you lose your inheritance in Intel stock. I thought that was funny. Which one? There is this kind of video where the Intel guys confront him and they're telling him, we don't have the ability to manage. We don't think you have the ability to manage grandma's inheritance. I think that meme is really funny, and I feel like you should go check it out. But we should go back to understanding the thought of a retail investor. The first problem in the stock market, why a lot of investors fail, is that when someone is trying to become a doctor, they normally first go to school for 6 years, and then they put up a sign on their door saying that, hey, I am a doctor. But normally when people are trying to make money in the stock market, they first put up a sign on their door saying that, hey, I'm an investor, and then they go and try to study on how to become an investor. Let's look into the mistakes that he did that people shouldn't do. This is now the technical part of the video. We can see he bought Intel. This was 1st August. And of course, this is someone who doesn't know a lot about the stock market. I'm very sure that he didn't know that earnings were the next day from the way he speaks. As soon as he bought, Intel reported earnings. Earnings are some of the things that investors and traders should watch out for. It's normally best to wait for earnings and then you can start your position, right? If it's too close to earnings, just wait. Just be patient. Because here, Intel gapped down. Here, Intel gapped down. For the last few earnings, it's been gapping down. This earnings, it gapped down. And that is what made him lose over $200,000 US. The first thing is, do not try to buy around earnings. Do not try to predict. Wait and see the report card of the company before making the decision, because it's very volatile around these days. The second mistake that he made is that he did not make his due diligence research on Intel and the whole industry on its own. One other thing you should know is that in the stock market, never believe the news, never believe the stories. We can clearly see Intel. This is the 50-day moving average. This is the weekly chart on this side, and this is the daily chart here. We can see that the 50-day moving average is sloping down. Whenever the 50-day moving average is sloping down and the stock comes and fails to cross over the 50-day and keeps failing, those are great times to short a stock. These are great opportunities for him to short the stock. But I guess he didn't know that because he's new to the market. And another mistake that people do is that they try to look at only fundamentals, but then they forget about the technical analysis. Because remember, a company is a business. You must see that it has good fundamentals, but also there is something called price action, which depends on human psychology. And that is very different from the business aspect of things. There are two things controlling the price. There is a fundamental value of a company, and there's also the technical price, and is driven by fear and greed. Very little is driven by rationality. You also have to keep that in mind when you're trying to invest. The third thing that this person failed to know or doesn't know is that stocks always move in industries. As you can see, Intel is in the semiconductor industry. When you are looking at the semiconductor industry, you want to compare the stocks in the semiconductor industry. You don't want to get the weakest dog in the pack. Many investors, they always feel sorry and they feel like maybe the worst dog in the pack will maybe one day become the biggest dog in the pack. But that is not the case. The weakest dog always dies and is beaten up. The strongest dog in the pack always brings the greatest return in the stock market. Let me show you just how to do that. What you can do is go into a software. I like to use TC2000, and bear with me here. Some of you might not be familiar with these charts, but I'll try to explain as much as I can. You must first know the sector. So we're in the technology sector. In that technology sector, we must then go into the semiconductor industry. And now we can see the semiconductor industry. This is the chart that shows the average of all semiconductor stocks. And remember, we don't want to choose the worst stock. We always want to choose the best of the best. That's something which investors should always remember. There is no advantage of choosing a worse stock. You always want to choose the best, unless you have a lot of money and you're a hedge fund. The reason why hedge funds have to invest in over 100 companies is because they're bounded by law. They can't always be in the best stocks ever. What you do is you can type in Intel, and I'm going to show you why Intel is a very weak company. You have to keep asking yourself, are you a retail investor? Yes. Do you think you're smarter than hundreds of banks and hedge funds which spend their whole day researching stocks and industries? It's possible that you could be, and you could be an Einstein, but remember, it's very unlikely that you are making as much research as a hedge fund. Let's see, from January, if someone invested in Intel, what was going to be their return? Probably their return is negative 58. Now let's look at other stocks in the semiconductor industry that are stronger. Normally I use this sign called IBDRS, and it can show us strongest stocks in the industry. The first is NVIDIA. If you got it in January, right now you're up 119%. Then there is Cyrus, because all stocks normally follow the industry. If you got it in January, you get 45%. There is AOSL. If you got it in January here, you're up 20%. There is ARM Holdings. I like this one. If you got it in January, you're up 70%. You see, it crashed, but it went up much, 176%. There is no need of staying in these really bad stocks, yet they're really strong stocks. And if we look at the earnings as well, we can see over here that Intel is not a super growth stock anymore. The return on equity is not above 17%. Return on equity is something to show how much a business is profiting. And you want something above 17% for a super growth stock. This one does not have that. Earnings per share growth, the earnings are not growing. Intel is actually crashing. They're not consistent. Sometimes they grow, but they're just not consistent. And you can see that the earnings are growing, but the revenue is not growing. What does this mean? This normally means that the company is getting more profit from the same revenue, and that's probably because it's just cutting costs. It is not really selling more goods. But this is also not a good sign. You want to see the revenue grow. You want to see the earnings per share grow. And just to show you what companies with really good earnings can do, let's look at some of the examples. There is this one which I like, FTI. This one, it just keeps going up. It just reported bad earnings, but before this, they were good. Get it at the beginning on January. Thing went up 163%. Right now, it's about 127%. As investors, you want to be focusing on these really strong stocks and avoiding stocks like Intel. If you like such content, like and subscribe to the channel, and may the markets be with you.